Gentleman from Iowa, Mr. King.
Thank you, Mr. Chairman. I would just comment in listening to the last presentation that an additional 1,000 engineers in the success of Chrysler, I bet the secured creditors who had their assets confiscated in the Chapter 11 filings have also been made whole and who had their assets restored and received their dividend checks, and that the shares that have been handed to the unions have been handed over to their rightful owners. I don't think any of that happened. And that's the other side of the story from the gentleman's comments. But, Mr. Secretary, aside from those disagreements we might have here on the panel, I'm curious about some things to lay down a foundation. And when I listen to you speak, and I appreciate your testimony, I don't hear things I disagree with. And often your analysis is accurate within at least the scope of what you're talking about. So just a couple questions to help me illuminate your philosophy. On a scale of 1 to 10, how would you rank Milton Friedman?
That's an interesting question. You know, I'm not an economist, not a trained, credentialed economist. So I'd say I probably agree on a lot of his things, but not on everything.
Wouldn't put a number to that?
No, I wouldn't do that.
Would you put a number to John Maynard Keynes?
No, I wouldn't do that either. I'd say the sort of same thing, which is no perfect guide in either to the challenges facing the country, but things we can draw from both.
Adam Smith?
I'm not going to give you a number. I'll say the same thing to you no matter what. You know, again.
Yeah, I'm a little surprised because I would look at you and I think this is a man that's a complete expert on all three of these individuals who has
got the wrong guy.
An intuitive and intellect and a gut understanding of the flow of market capitalism globally and historically going back a couple of hundred years plus. I do expect you to have that basis of knowledge. And
I am a student of financial crises, unfortunately, but not a credentialed economist. You know, the philosophy I break is a much more pragmatic test. What's going to work?
Okay,
ultimately,
good.
That's what matters.
Then I am interested in what's going to work as well. And we discussed the burdens of regulation on business in here, primarily small business. And there are a few things that stick in my mind, having founded and operated a small business for not quite 29 years, and it's a second-generation business today. And I would list 3 of the top regulation burdens, which we've discussed, as a small businessman by trade. And I would list them: IRS, Obamacare, Dodd-Frank. Can you come up with any regulations or any proposals that are a heavier burden on small business than those 3?
That's an interesting way to frame your question, but I'd take a different approach. The tax burden on small businesses, as I said at the beginning, is lower today when the President took office. Now, you're right, Congress is now debating what should happen to tax policy in the country as we try to dig out of our deficits, and we're going to have to figure out a way to do that is fair to the American people, that can be passed by the Congress, that is good for future growth, and people disagree on that. The country is very divided on that, but the tax burden today is lower than when the President took office. We've already discussed the financial system at some length. I know a fair amount about that. And again, I would say is, how good was it for small business across the country that they were left with this amount of damage caused by a failed financial system, something we have to fix? And again, the bulk of that law is not directed at raising burdens on small banks. That's important to avoid.
Let me just inject in this. And in your earlier testimony, you talked about the crisis was caused, at least in part, by a country living beyond its means, and I agree with that. And that we've overbuilt in housing, and I agree with that. And I would ask, though, that the solution for that appeared to be TARP, economic stimulus plan, increasing a lot of government spending, and now we have a government that's living beyond its means. It seems as though, from sitting here as a member of Congress and a small businessman, that the solution for the problem is to apply to the federal government the same problem that small business had. In other words, we've overspent with government, we live beyond its means, and now I believe I heard some reference to you in that if you have that kind of a solution, it delays the recovery because we have to pay interest and principal. Some concept along that line is not your word, certainly.
Well, let me tell you how I approach this. You know, again, we have unsustainable deficits, long-term, short-term. They're a product of a bunch of decisions made the last decade, the product of the recession, and the principal driver of the long run is that Americans are living longer, aging, health care is very expensive. Now, if we don't address that, then investment will be lower, growth will be weaker, interest rates will be higher, the economy will be burdened by that.
We do agree with that.
Yeah, so I agree with that.
I agree with that, but when you apply the federal government's debt, is it the same concept of the equation as a business that's over-leveraged?
A little different in the sense that, you know, governments are not a business, not a family. And in financial crises and recessions, lesson of history is that when the markets pull back, private sector pulls back, the government has to step in temporarily, but only temporarily. And very important to make sure the government pulls back as it's now doing. And the government is starting to pull back now. That is slowing growth a little bit, so you want to be careful not to overdo it. But the key lesson should be for us is the composition of these reforms on the budget side have to be designed in a way that they don't hurt growth short-term and long run. That's why we believe you have to have some balance.
If I could ask unanimous consent for just an additional question. Thank you, Mr. Chairman. I just, again, your testimony is interesting to me, Mr. Secretary, and one of the things that you said was Roosevelt said that one thing we need is bold experimentation. And I recall a statement made to us by the President, and a date was February 10th, 2009, in speaking to a Republican conference, when he said that that Franklin Delano Roosevelt's New Deal actually did work, and that the problem was that he lost his nerve in the second half of the 30s and got concerned about spending too much money, and he pulled back, which brought about a recession within a depression. Unemployment went up. And then along came World War II, the largest economic stimulus plan ever. That's almost verbatim. It's conceptually exact. And so I'm wondering if what you think of this bold experiment of President Obama's that seems to be committed to be substantially more bold than that of Franklin Delano Roosevelt.
I of course, work for this president, and I believe in everything he's doing, but I wouldn't quite compare it that way. When I was using that phrase to refer to the range of things we had to do to fix the financial system, put out the financial fire, and, you know, we did exceptional things no one would ever want to do. Would never want to do again, ever. And the things we're doing in the credit side, capital side, are very creative, no precedent for it, and they require new approaches in that context. That's what I was referring to.
Well, I like audacity when you're right. Thank you, Mr. Secretary. Thank you, Mr. Chairman.